What's up, everyone? Eric here again. Today is the 8th of December 2020. Today's trade alert is in NFLX. I sold the 430 put for January 15, 2021, and I collected $3.05 of credit. Let's take a look at the trade tab details. Per usual, the 30 to 60 day window is what I'm looking at. We're starting to approach the lower end of that with the 38-day window right here. So that's what I went with. When you open this up, you actually have to scroll up. Once again, I sold the 430 strike here. Looks like it swung slightly in my favor over the last couple hours as I collected slightly more than $3. Right now you're collecting $2.86. This gives you a pop of 90%, P50 of 94%. In theory, your max loss would be $42,000. And this one is definitely on the higher end of buying power at $4,300. Now, NFLX is a pretty high price stock here at around 500 bucks. The pro to that is that you can still collect real nice premium even at the 9 delta, right? I mean, we're pushing $300 at the 9 delta. If you'd go for my usual $200, you're up here at the 7 delta. I mean, all of these are in the 90% or better profit percentage. However, the major downfall with these is that your buying power is pretty dang high. With that being said, if you can get a decent entry and the underlying stock price moves in your favor, these trades can move very fast, which again, that could be a pro and a con. If it moves against you and you pick a bad entry, you can lose money real quick. But usually with a little bit of technical analysis and then matching up the deltas and the option chain to kind of verify everything makes sense, you can get in a decent price and then you can get out sooner than later. Not always, obviously there's exceptions to everything. And as always, when I get into trades like this, when I get into any trade, I fully expect to be in it for at least 2 weeks, no matter if it's a naked put or a strangle or an iron condor or whatever it is. I'm never planning on these to move in my favor in just a few days or under a week or whatever. So a naked put has an undefined risk. If you want to define that risk and define your buying power, you need to purchase a farther out of the money put as protection. So you can buy the 425 here. However, that only gives you 42 cents. That is not nearly enough, in my opinion. When you're shooting for a 50% profit target, that's only like 20 bucks. And that's way too little. It's not even worth your investment. So to collect more money, you have to be more aggressive on your strikes here. I think if we go up here to like 460, there you go, 92 cents. That's getting pretty close. There you go, $1.06 at the 465 and 460 as protection. That gives you 76 pop, 78% P50. And then looks like Tastyworks is working for me today and calculated this properly. So your max loss is $394 if you collect 106. And your buying power is also capped at $394. So that's a huge difference between $4,000 and roughly $400, right? That's a 10 times price difference. So this is why the spreads are great, because even though NFLX is a really high dollar ticker, you can still get into a normal 5-point spread here, and you're risking the same amount of money as you would on like a $50 ticker with a 5-point wide spread. With either of these trades, I go for roughly a 50% of my max profit. So on this spread here, your max profit is 106 because that's what you sell it for. So 50% would be 53 cents or $53. Before we go, let's take a look at the chart real quick. All right, so here's today, the 8th of December, 2020. I sold the 430 put right here for $305 or $3.05. The underlying stock price when I opened the trade was $509.50 approximately. The stock has ticked up a little bit higher today, which is right now why you can only get about 280, I think that was saying, instead of the 305 for the same strike. My quick technical analysis on this is we're in this long-term channel here. There seems to be real strong support right around this level here at like 465 or 475, somewhere in there. There's been a lot of consolidation here for the last several months. This is way back in July. It's kind of just stayed up and down here, kind of did this triple top on the top of the channel. We're relatively close to merging up with the long-term 200 moving average here. So this is starting to merge somewhere up in here, you know. Just in the last week or so, we regained the blue line here, which is the 20-day moving average. And if you go down to the MACD, we are increasing currently. You could argue that this is potentially starting to get near top, but it's in the right direction for what I want it to do right now, because I just want the price to go up, or I want it to go sideways. So if this continues to consolidate like this, I don't care. That's where selling the option is way more advantageous than buying the stock outright. Because if you bought the stock here and it kept moving sideways, you're not making money. But me as an option seller, I make money because it stays above this 430 put. Anywhere above here, so if it goes up, or if it goes sideways, or it can even come down slightly, as long as it's above that 430, I make money eventually. And then also the RSI is kind of mid-range and increasing. So the RSI, the MACD, they kind of line up here, and the consolidation, reclaiming the 20 moving average here, all kind of stacks up that it's heading in the right direction to sell this put. Also, if you want to look at the Elliott wave real quick that I've been taking a look at the last few days, let me turn it on real quick. So with the Elliott wave, this is more of a long-term trend starting back here in September of 2019. Long story short, you could make an argument that we are starting now the last impulse wave up for wave 5. If this pans out like I have plotted here, that means this 5th wave is headed much higher here, up above $600. So again, I wouldn't put all of my eggs in one basket here with any of these indicators, with the Elliott wave or the MACD or the RSI or this channel or the 20-day moving average. All of them stacked together though end up making a decent argument for selling puts, or if you wanted to buy the stock, you could just buy the stock, and it makes sense that prices will continue higher from here. But again, even if you combine multiple indicators, they could all end up being wrong. And for all you know, I'm a giant idiot and I have no idea what I'm talking about with RSIs or MACDs or Elliott waves or even the simple moving averages. I could just be a big fat dummy on YouTube. Don't take my advice. I could be faking all these charts and I'm just trying to swindle you out of money, even though I wouldn't benefit from this whatsoever if you followed along. Anyways, enough rambling for now. I will update you on this trade if I have to roll it or when I close it or if anything else happens. Thanks for tuning in. I'll catch you in the next video.